Hello everyone, and welcome to the financial mini lecture. In daily life, when individuals or enterprises face a shortage of funds, they can apply for loans from commercial banks. So, if commercial banks themselves encounter financial strain, for example, experiencing concentrated withdrawals or insufficient liquidity caused by credit expansion, whom can they turn to for assistance? The institution that can step in at this critical moment is the protagonist of today's lecture, the central bank. The central bank, often abbreviated as CB, is the core and highest authority of a country's financial system, and it is the inevitable product of economic and financial development reaching a certain stage. It possesses the following four key characteristics. 1. Not profit-oriented. The operational goal of the central bank is not to pursue profit, but rather to ensure the sound functioning of the entire financial system through instruments such as monetary policy. 2. Special status. As the highest authority of the national financial system, the central bank's status is conferred by law, giving it statutory authority and independence. 3. Special clientele. Unlike commercial banks that serve enterprises and individuals, the central bank's primary clients are the government and other financial institutions. 4. Unique functions. The central bank not only monopolizes the right to issue currency, but also formulates and implements monetary policy, assumes the role of lender of last resort, and represents the nation in international financial activities. Through long-term development, modern central banks have gradually established three core functions: the bank of issue, the bank of banks, and the government's bank. 1. The bank of issue. This function is mainly reflected in two aspects: monopoly over currency issuance. The central bank is the only institution authorized to issue legal tender. Regulation of money supply. As the supreme decision-maker of monetary policy, the central bank adjusts the money supply according to the needs of economic development, maintaining currency stability. Example: the People's Bank of China is the sole institution authorized to issue CNY. It regulates the supply of CNY in line with economic development needs. 2. The Bank of Banks. Literally understood, this means the central bank serves as the bank for commercial banks and other deposit-taking financial institutions. This role is reflected in three aspects: custody of reserves, organization of nationwide clearing, and acting as lender of last resort. Let us examine them one by one. Custody of reserves. After absorbing deposits, commercial banks cannot lend out all funds. By law, they must deposit a certain proportion with the central bank. Therefore, each commercial bank must establish a reserve account at the central bank to pay required reserves. Some institutions also deposit excess reserves to strengthen their payment and clearing capacity. This is similar to every household keeping an emergency fund in the bank. Reserve deposits are the emergency funds of commercial banks, ensuring they can cope with sudden large withdrawals. Organization of nationwide clearing. When you make an interbank transfer via mobile banking, the money does not literally fly from Bank A to Bank B. In fact, the clearing is carried out by the central bank in the background by adjusting the reserve accounts of the two banks at the central bank. It functions as the super clearing center of the financial system, processing billions of fund transfers daily, ensuring that every payment is completed safely and efficiently. Acting as lender of last resort. This is precisely the critical role mentioned at the beginning. When commercial banks or other deposit-taking institutions face financial difficulties, and other institutions are unable or unwilling to assist, the central bank acts as lender of last resort, providing emergency funding to prevent systemic risk contagion. It becomes the solid backing of the entire financial system. Example: during the 2008 global financial crisis, the U.S. Central Bank, the Federal Reserve, provided emergency loans to many banks on the verge of collapse, playing the key role of lender of last resort and preventing the breakdown of the entire financial system. 3. The government's bank. Although in many countries the capital of the central bank is state-owned, this function does not mean that its capital belongs to the government. Rather, it refers to its close relationship with the government, providing financial services and fulfilling financial management responsibilities on behalf of the state. This mainly includes 4 aspects. Treasury agent. The government's money bag is managed by the central bank. All taxes we pay ultimately flow into treasury accounts managed by the central bank, and all fiscal expenditures are disbursed from these accounts. Agent for government financial affairs. This includes issuing government bonds, managing national gold and foreign exchange reserves, and representing the country in international financial organizations. Example: China's large foreign exchange reserves are managed and operated by the People's Bank of China, providing financing for the government. In specific periods, the central bank may help the government cover fiscal gaps. However, to prevent excessive currency issuance and hyperinflation, modern central banking systems strictly limit direct financing of fiscal deficits. Example: China's law of the People's Bank of China explicitly stipulates that the People's Bank of China may not overdraft government finances, directly subscribe to or underwrite government bonds or other government securities, nor provide loans to local governments or government departments at any level. Performing financial management duties. As the nation's highest financial authority, the central bank formulates financial policies, issues regulations, and supervises financial markets and institutions. Example: the People's Bank of China directs and deploys anti-money laundering work in China's financial industry, monitors funds for anti-money laundering purposes, and supervises the interbank foreign exchange market, interbank bond market, interbank lending market, and the gold market. The central bank is the anchor of stability in the national financial system. It has 4 major characteristics: not profit-oriented, special status, special clientele, and unique functions. It undertakes 3 core functions: as the bank of issue, controlling the source of money; as the bank of banks, maintaining financial stability; and as the government's bank, serving national development. Among these, the role of lender of last resort is the central bank's ultimate weapon for safeguarding financial security in times of crisis. Well, that concludes today's lecture. Thank you for listening, and see you next time.